So market volatility has exploded in the wake of Trump's historic tariff announcements, and everybody is sitting around trying to figure out what's next. In a recent Sevens report, I detailed specific events that would either make the situation better and hopefully lead to a market rebound, or make the situation worse and push us further into bear market territory. As far as what can make this situation better, there are really two main candidates. The first is concrete tariff reduction. Now, I'm not talking about Trump tweeting or putting on Truth Social that he had great conversations with this leader from this country, or they're making progress, or we're moving in the right direction. That is not going to work anymore. What we need to see is actual announcements from the administration that reciprocal tariffs have been lowered against certain countries, hopefully major trading partners like the EU, Vietnam, or Japan. That will give markets confidence that all of these tariffs are just a large negotiating ploy, and that over time we can expect tariff reduction. The second thing that could make this whole environment better is if we see legal challenges to Trump's tariffs advancing in the courts. Most of these tariffs are built off of a declaration of an economic emergency that Trump did back earlier this year. Well, we are likely going to see challenges to just how much of an emergency the economy is in. And if courts rule that these tariffs are illegal, you will see markets rally in response, as it will give investors some clarity on what the trade situation will be going forward. Now, if we think about what could make this situation worse, unfortunately, the list is longer than what could make it better. And that's obviously because markets are facing tremendous, in fact, historic uncertainty. The first thing that could make the situation worse is fairly obvious. Investors hope that what we saw on Liberation Day is the peak of tariffs against our major trading partners. If that proves untrue and we see Trump come out with new tariffs, higher tariffs, tweets that he's threatening additional tariffs, that's only going to make markets realize that this is not over, that the worst has not been revealed. And it's going to string out this incredible uncertainty that is pressuring markets. The second candidate that could make things worse is if we don't see reciprocal tariff reduction. So let's say Japan comes out and they say, you know what, we're cutting all of our tariffs to zero on US goods. And the administration says, gee, thanks, but we're not cutting any of our reciprocal tariffs because you still have non-tariff trade barriers. That will be incredibly negative for markets, because it will destroy the idea that these reciprocal tariffs are all just a negotiating strategy. And instead will put in investors' minds the fact that these tariffs are going to be in place for a really long time. If that happens, brace for substantially further losses in stocks. The third event that could make this situation worse is if Trump enacts price controls. Let's say that I'm producing wine in California, right? Well, French wine now has a tariff on it, and that's going to make the price of that wine increase for consumers. My American wine doesn't have a tariff on it, but now I'm substantially cheaper than my French competitors. So if the French wine tariff is 20%, maybe if I'm an American wine producer, I raise my prices 10% because I'm still cheaper than my competition, but I also can make more money and increase my margins. That is a major fear right now, that domestic industries will use this as an excuse to raise prices when they otherwise would not have. If that occurs and Trump threatens price controls like we saw in the 1970s, that will really make this situation substantially worse, because it will result in increased inflation and reduced availability of goods. If you start to see about price controls, buckle up, because this market is going sharply lower. The final event that could make this situation worse is if Trump declares a public relations war with Fed Chair Powell. Prior to a recent speech, Trump posted on social media that the Federal Reserve should cut interest rates now to help the economy as the trade war explodes. Unfortunately, because of the tariffs, the one thing the Fed can't do is cut rates, because they have absolutely no idea how high inflation will run now that we have these tariffs. If Trump starts to demand that Powell and the Fed cut interest rates, or threatens to fire him or tries to fire him, which is not clear if he can legally do, that will further undermine market confidence, and we will see stocks go sharply lower. The bottom line is we are in unprecedented territory here with these historic tariffs, and nobody knows how this is going to work out. But it is important to be able to identify the specific events that could either make it better and hopefully put an end to this volatility, or make it worse and put us into a truly nasty bear market. We provided that for Sevens Report subscribers recently. And if you would like to access that full list, please start your free trial today by clicking the link below.